Wonderful. Good afternoon, ladies and gentlemen. Nice to meet you again on Wednesday afternoon. Today, we are talking about the importance of a portfolio diversification. And we have different topics. We want to talk about this. For example, what is basically a portfolio diversification? What does it mean? Then the sense of this diversification by lowering the volatility, smoothing out returns, different asset classes, and what does it mean if we talk about diversification and the time horizon and the goals. I hope you can make sure that you stay until the end of this webinar, or maybe the end of this YouTube video if you watch it on YouTube later. And I'll be showing you why diversification also is kind of safeguard you against adverse market cycles, and why it can reduce some kind of volatility in your account. So my name is Markus Gabel. I'm a trader, coach, speaker, English, German, with experience more than 20 years right now, a long time. Jesus Christ, time flies by, I can tell you this. I have my own trading service, and of course, I'm a trader at the asset management Born Stahlberg and partner. And if you want to have more information, then visit my homepage. It's called tradingandpersonality.com. I am looking forward to see you there. So in this webinar series, Trading Spotlight, of course, is the name. I'm partnering with Admiral Markets, which is a Forex and CFD broker that offers trading on over 8,000 different financial instruments through one of the world's best trading platforms, MetaTrader 5, and of course, MetaTrader 4. Finally, if you're watching this on YouTube, remember to like this video, share it with other traders, and subscribe so you will never miss an episode. I don't want to forget to say thank you for Katie, my host in this webinar. She's working hard for you beyond the scenes. Okay, guys, let's talk about portfolio diversification. And the chat, of course, guys, is open. If you have any questions about this or about trading, whatever it is, and it fits to the topic this afternoon, then use the chat, please. It's open and we can talk about everything, because we do this webinar for you, because we want to offer you a value and more worthful value for your own trading, because all of us, we know trading is so hard and you can lose money, and losing money is not really funny, especially without knowing why you lose your money. So let's talk about this. And in my webinars, I want to tell you a little bit, or I wanted to bring your focus on different spotlights. That's the name, Trading Spotlight, you know. I want to bring the spotlight to the human part of trading, because it's the bigger part of trading success. So, and one of the secrets in trading is this kind of diversification in your account or in your portfolio in general. So let's talk about what is portfolio diversification. It's a kind of investing. It's a specific or a special concept of investing. Most of us, or maybe most of you, you know this portfolio diversification. It's related to shares. Don't put all your eggs in one basket, for example. And portfolio diversification, it's a risk management strategy of combining a variety of assets to reduce the overall risk if you are engaged in the trading account, or in trading, or in investing in the stock exchange around the world. Doesn't matter wherever you are at the moment. And this is the traditional wisdom, says, don't put all your eggs in one basket. It's not the best. And I guess this is one big mistake real or young traders, unexperienced traders make in their trading career, especially. Why is it a big mistake? Let me explain it. by my own example. So my trading career lasts around 20 years right now, a little bit more than 20 years right now. So, and at the beginning of my own trading career, it's long time ago. Um, I started with DAX, the German index. And by the way, my English is German as well, you know. So, but please be patient with me. Sometimes my grammar is not the best, and sometimes I'm looking for some words. But I hope you will understand me. So, I'm one of the best examples ever, because when I first started with trading, I was a DAX trader. And after a couple of weeks, I thought I was an expert in DAX trading. But my first account I destroyed, my first account got destroyed by DAX trading. So after a couple of months, I said, okay, I cannot be an expert in DAX. Then I switched to gold. And afterwards, I switched to oil. And the other time, I switched to shares. But my problem was always and all the time I was focused on one market. And this is one of the biggest mistake, because even you have a strategy, and you know less people have a strategy in trading, but even you, maybe you have a strategy and you're focused on one chart or maybe one market like DAX or gold or whatever it is, uh, and you will follow your rules. It could um, it could mean you have to be really patient for a long time, because sometimes you sit in front of your screens. I have something in my eye. Jesus Christ! I guess I look too many. I watch too many charts actually. Um, Sometimes you sit in front of your screens, and maybe you are a DAX trader or maybe Dow Jones or whatever, and you waiting for your signals. And the time goes by, the morning runs away, then lunch, and then the afternoon, and your your strategy doesn't occur in this day. So in the afternoon, you say, "Oh God, it's the time. The day is almost over, and I don't have any trade, or I didn't make a trade right now." So, and then you are really close to break your own rules. In the mean thing, you can make a trade. And this is the big danger if you're focused on one chart. So that's the point why we're talking about kind of diversification. The more baskets you have in your trading, the less is the danger you break your rules. Because it doesn't matter if your strategy won't fit in one market, because you have different markets. You can work with your own strategy. So let me see, I got a message here from Tyrone. I've been more involved in crypto, but I'm looking to diversify into the stock market. How do we research good company assets to look into with the screener? What should we look into if COVID lockdowns come again? What went up during lockdown and what may pick up if the economy starts to pick up again? Really interesting, Tyrone, really interesting. What is the best time frame to look at for stocks? 1 month? Of course not. And how do we work on a time to hold for, say, midterm trading? I have huge issue with entries, feeling like I often get in too early, and I'm trying to break away from short-term trading to mid-long-term trading. Crypto is just such a wild beast, and I want to create wealth. It has been a hard 4 years teaching myself to trade. The time flies faster than expected so often. That's absolutely true. I'm on your side, Tyrone. I will give you the answer if you stay till the end of this webinar, because I was struggling with the same questions years ago, and all traders going the same track all the time. So, and I guess it's interesting, or maybe it could be an advantage for you if you listen very carefully to my words and if you try to read between the lines. So, and I want to explain the point of diversification. So, and by the way, I don't trade crypto, of course not. Crypto is interesting, yes, but it's just only an underlying, no more, no less. It's completely overwhelming cryptocurrencies. And it's not an official payment, of course not. And no one knows which kind of crypto will survive. Actually, the ECB is working on a digital euro. No one knows which crypto will survive at the end. And it's so, but maybe it could be an interesting investment. So I never traded crypto and I won't trade crypto, of course. And I guess I have a little bit experience after 20 years right now. If you want to ensure that your portfolio is well diversified across different asset classes, or maybe strategies, styles, and size, you spread your risk exposure. And there's a special word in it. Maybe you figure it out. So, what is a special word? Diversified across classes, styles, size, and strategies. And strategies, a kind of diversification in strategies, is one of the biggest secret in trading. And this is what I teach in my coachings, different strategies. Because the problem is, if you work with one strategy, whatever it is, doesn't matter. There exist thousands and thousands of strategies outside there you can work with, really successful. I can suggest work with really easy strategies. If you work with really complicated strategies, then your mind cannot work on it. You know, if you are focused really complicated strategies, your mind is focused on holding your sticking to your rules, but actually you will have losses. It's a part of the game that you will have losses. And to handle the losses, it's a human part. But your mindset, your brain is not able, it's indeed scientifically proven, your mind is not able to focus on two different construction places with the same energy. So if you have a complicated strategy, like whatever, I don't know, there exists so many outside there. If you have a complicated strategy, you cannot focus on the same, with the same energy, brain energy, on your personal development, on processing, on sticking to rules. It's hard. And you know, trading success is based just only 10% strategy, but 90% is personal development, is the human factor. So in my opinion, and this kind of portfolio diversification comes up by talking about shares. Some people say, you have to switch, you have to diversify your portfolio from maybe tech stocks and really stocks from Dow Jones and stocks from S&P 500. So this is a kind of diversification people really know, really good. But less people, especially in trading, less people ever thought about kind of strategies. But this is one of the big secrets. Why is it? I will explain a little bit later. Be careful, please. I'm Medellin, Colombia, and I'm beginning. It's important focus in one because I need to discover me, my instrument, my style. Claudia, welcome to our wonderful Spotlight community. Even you are a beginner. And if you are a starter in trading, and lovely greetings to Colombia, what can I suggest? To be honest, take a mentor. Save your time. So take an example, Tyrone. Tyrone, for example, said he's teaching himself since 4 years. Ladies, gentlemen, 4 years. Look this one, 4 years. Time runs up, time flies by. How many lives do you have? How many? Tell me. How many lives do you have? Do you have more than one life? So I know I have one life, one, just only one. And I don't know when it will end. I don't know. I don't know when my time is running up. I don't know. And this hourly glass, I can switch, it's done. But if my hourly glass is done, I cannot switch, I can switch nothing. So how many lives do you have? So 4 years, Tyrone lost 4 years of his lifetime. 4 years, wasting of lifetime, I call it. And I lost 7 years. I lost 7 years of my worthful lifetime before I made the decision to take a mentor. And he was able to taught me the real stuff about trading. So this is the first advice I can give you. Have just looked for a mentor. Stop figuring out by yourself how trading is working. Yes, you can watch our webinars from Paul, Jens, and me. This is the best thing you can do ever. But if you want to learn something, it's the best you have a teacher. It's the same you want to learn a strange language like German or maybe whatever, Chinese. So yes, you can watch videos, you can watch YouTube videos or something else. But at the moment you want to learn something new, it's always the best. And you can save lifetime to take a mentor. It's not about strategy, Claudia. It's just an advice, just a friendly, nicely advice. Save your lifetime. You have to understand how the market works and not the obvious things. You have to learn what is beyond the scenes. So now, for example, you see me in front of the screen, my camera, but I'm not important. You know who is important? My host, Katie. She is important. Why? She's my host. She opens this webinar. She recorded this webinar for you. She cut my stupid, my stupid words, and she makes a lovely video so you can watch it later on YouTube. So she's the one who makes this webinar. I just read these slides, and I only share my experience with you. But I'm not important, of course not. And this is the same like in trading. You have to learn what is beyond the scenes, how you can learn what is beyond, what is the real interesting stuff about trading. And this is my just friendly advice. Just invest not in the market, not in figuring out a strategy. Take your money, open an account at Admiral Markets, and invest in your education by having a mentor. I wasted 7 years. Tyrone, for example, wasted 4 years right now. And you see, he asked me really basic things like crypto. So which one is the right stocks right now? That's basics, but that's the wrong questions. Tyrone, listen to me. You ask the wrong questions because it doesn't matter what you want to trade. Completely doesn't matter. It's not interesting about coronavirus. It's not it's interesting about the election in 3 weeks. It's not interesting, but you will never trade a stock. Never. That's a trick. That's the big trap all traders fall in. And I fell in as well. Too late. 7 years too late. My teacher taught me what is really important in trading. And this is why you can look and can watch and can follow our webinars, our trading spotlight community, and those things. And this is why I talk about a little bit the obvious things like diversification. So, and let's go a little bit on. Jesus Christ, time flies by. My Jesus. So if something goes wrong with one security, so with your shares or whatever, it just only accounts for a small proportion of your investments that therefore want to be detrimental to your overall account. And this is the interesting part why, in my opinion, portfolio diversification is not the meaning between different stocks, technical bonds, whatever. It's strategy. It's really strategy. Because if one strategy doesn't work, maybe the other one is working really good. And if you watch my trading, if you watch my trades, and if you follow my trades, or if you have a look at my trading account, it's published, it's open, everybody can look at my account because I'm a real trader and I have a real account. It's not a fake account, it's not a demo account, I have a real account. So, and then you can see I'm successful now, the third year in a row. Okay, I'm engaged in trading 20 years. I'm longer invested in trading, but this is a published account because I want to show you how you can be successful every single year. That's the point. And I'm not successful because I'm smarter than you, of course not. I guess I'm the stupidest guy of this planet Earth. It's the kind I follow my rules and I follow my words of my teacher. And I have 4 teachers, I have 4 mentors up to today. And this is the point why I am successful. And this is what I want to share with you, my experience. You don't have to be too smart for trading. You need to be willing to change your mindset and to invest in the right things. It doesn't matter which stocks. You don't trade a stock. Never forget, you trade the price. Doesn't matter. Whatever you trade the price. So personal coaching is the key to success. Thanks, Plumman. Thanks, Plumman. Do you have reason I opened my account in Admiral and I learned so much with you? Okay, Claudia, do you have? No, thank you very much. If you have any questions, I'm here for you. Okay, let's go on. Diversification will lower the volatility in the market. Why? You can see it in a slide. The ultimate aim of portfolio diversification is to lower the volatility of a portfolio because, never all assets, categories, or industries or stocks move together. Never. Sometimes stocks better, sometimes currency better, sometimes bonds better, sometimes commodities better, whatever. And this is why you should have this kind of diversification through all markets. And this is the point. Now think about it. If you want, so Tyrone asked me about which shares. Is it really interesting, or is it really important which specific shares? I guess not. Think it through. You cannot have an influence to the market. Never. Your account is too small for that. So it doesn't matter which stock you pick. You have to follow strategies. The stock is not interesting. The stock is not important. So which one of the technical stocks you should pick up? Which one? Tesla? Amazon? Apple? Whatever. Zoom? Which one? Doesn't matter. You have to make the choice between trading and investing. If you want to invest, then you invest in a specific company like Tesla, Apple. You invest in the company. This is completely different to trading. Trading is the active part. Trading is in, out, days, weeks, months. Investing means you are investing on a company and you believe in this special company. Then you gave your money by buying this share of this company. But this is not trading. Trading means active part. So, and if you are an investor, you buy the shares of a specific company. Okay, maybe you can build up your basket, of course, with different investments, but then you have a special time horizon of years and years. But then you have to be patient. And then you have to accept that we have long runs and we have big corrections because the economy runs in the bear market around 12 to 15 years and in the bull market from 12 to 15 years round about. And now the last bull market started 2007 with the financial crisis. So 2007, Now we have 2020, 13 years, right? And then now we have Corona and the economy is destroyed. In which market we are right now? You have to think about it. So which stock you will buy doesn't matter. You have to think about the price and about the strategy. But if the stock is too expensive, you will buy it? Of course not. Tyrone. Plumman said this. This is what you have to realize about the price. And you see, look at the price from Tesla, for example, or maybe Amazon. The prices are so expensive. It's like you go to the grocery and you want to buy strawberries and you're out of the season and you see the box of the strawberries and you can see, oh, the box costs $20. Would you buy strawberries for $20? I guess not. And this is what happened in the shares right now. So that's the point why I said, and here I make a point with why I said work with strategies, not thinking about which stock or which share I should. If it was rich, I could buy them. Yes. No, I don't. I'm sure you don't, because you can learn from the rich guys. And rich guys, think about Warren Buffett. He uses to buy cheap and sell expensive. From rich people, you can learn how to trade. Okay, by the way, I hope you understand what I try to say. By holding a variety of non-correlated assets or using different strategies, you can reduce specific investment risk. This is what I want to try to explain. So in practical terms, diversification is holding investments which will react differently to the same market or economy event. So and this is what's interesting right now. We have rising prices in the stocks, for example, in the exchange market. So which stocks are really put the market in new highs? Technic, just only Technic. It's Tesla, it's Amazon, it's Facebook, it's Google, it's Zoom. Just less than 10 shares moves the market to new highs. It's not the whole basement of all shares, of course not. And this is the problem, actually. So we have kind of correlations in the market. And this is why you have to diversify your portfolio and to thinking, okay, which shares should I buy right now? I can give you an answer. This share, which is cheap, because how you can make money in the market? If you buy cheap and sell expensive, or if you sell expensive and buy back cheap, this is the only way you can make money. Not by having an opinion or not by thinking about, oh, which share should I buy right now? Doesn't matter. You cannot have an influence to the market. This is the point. And it's also the best defense against a single investment failing or one asset class performing poorly. This is why I said you need more than one strategy. So won't buy, no, I'm wanting to buy the cheapest stocks or basket of stocks. I heavily oversold with divergence, I would think yes. Or finding a way to find a fair value stocks. For that you need, Tyrone, you need the information about the price. But this deeper insights, this is why I'm talking about maybe from a mentor or something else, more education in this point. But this is not what you can read in internet or something else. It's just learning a new job. It's just my private opinion about that. I think if you was rich, it's important to understand the market. Of course, yes. People are rich because they understand the market. And they know how they work with the market because they can make the market. This is a big difference. And once Warren Buffett were asked why he's thinking less people getting rich. And his answer was really interesting because he said, less people want to become rich slowly. Interestingly, right? Less people want to become rich slowly. And 2 weeks ago, just quick story, I said to a client, he wanted to have me as a mentor, and he paid me. And 2 days ago, he forced me to give him a sooner appointment, because actually I'm fully booked till the end of the year. And I said, I cannot, though your first appointment is in 2 weeks. Then he blamed me and said, I want to start right now. And he said, I give you first lesson as your mentor, be patient. But he wasn't patient. 2 days ago, he blamed me again. And then I said, okay, take your money back. I don't want to be your mentor. First lesson ever, be patient. You cannot get your money back in the same way you lost it. It's not possible. And if you don't want to accept this point, stop trading. Spend the time with your life, with your family, friends, whatever, but stop trading. You will never get your money back in the same fast or quick way you lost it in the market. Because do you know why you lost it? If once you figure it out why you lost it, then you will see you will never get it back in the same way. You can get it back. Yes, you can. Of course, it's possible, because trading is a really interesting thing. And everybody has the right and the opportunity to become successful in trading. It's absolutely possible, but not in that way most of the people think. And you know, around about 80% of all traders lose money. There must be a reason. This is wrong thinking. Kind of wrong thinking. Which share should I pick up? Should I pick up this one or this one? This is the wrong questions, guys. You used to ask the wrong questions. But for that, you need deeper insights. And you know, my mentor was the first lessons he told me a couple of years ago. He told me, Markus, if you want to reach a goal, ask someone who is already there, because only this guy can tell you the right way. Think about that. We can smooth out our returns with kind of diversification. When the economy is growing, like right now, is the economy growing right now? I guess not, not really. But actually we can see the stocks tend to outperform bonds. But basically, since 2007, 8, 9, roundabout, we could see the economy was growing up. And the stocks, that was Alexa. When the economy is growing, basically, stocks tends to outperform the bonds. But when things slow down, bonds often perform better than stocks. And this is another correlation. For example, I give you this example, the US dollar and commodities, because all commodities or metals are paid in dollars. So if you have an expensive dollar, the commodities like gold, silver, platinum went down because they have to hedge themselves in the market with an expensive dollar. If you have a cheaper dollar, you can see gold, platinum goes up. Some call they are paid in dollar. This is a kind of correlation. And this is why it's interesting maybe to work on dollar and the commodities, for example. But this is really, really deep, deep stuff you have to learn. Guys, let me tell you this one. I'm engaged in trading 20 years right now, and it's not funny. It's a really damned hard job. And only if you're willing to learn and if you're willing to think, then you have a big, big chance to become successful in trading. I learned in my trading career that it's not enough It's not enough to read a chart. It's not enough to know what is a reversal bar. It's not enough to know what is a doji. It's not enough to see what is a bullish harami or something else. It's not enough. If it would be enough, not 81% of all traders were losing money. If it would be enough. And if intelligence would enough to become successful in trading, more people would be successful in trading, right? It's not a kind of smartness. It's not a question of intelligence to become successful. You have to be, you have to think it through. That's the point. It's not enough that you can draw a trend. You have to understand the deeper insights. You know, that's the special sentence. That's the quote of my teacher. The most famous quote. He told me, we come to trading about money, but we stay about the insights. So what's the insights? You have to think about the insights. So by holding, for example, stocks and bonds in the same basket and the same portfolio, then you can reduce the chances of your portfolio being subjected to corrections when markets swing the one way or the other. So if you have growing stocks, you have lower bonds. But if the stocks come down, your bonds going up. Or maybe you have a rising US dollar, commodities going to go down or go down. And if you have falling dollar, the commodities goes up. This is why you have to think it through. And this is the deeper sense of a kind of diversification. But you see, it's not enough for in 45 minutes to talk about every stuff about diversification. You need time for that, of course. And it's a safeguard, it's a lifesaver. Diversification can be a lifesaver for your accounts, if you're against adverse market cycles, and reduces this kind of volatility. I have Admiral Market Account Manager. You're a lucky guy. I love my guys in Admiral Markets, of course. Now, how to find a mentor and teacher as a beginner, please. Try to find on the internet, for example. Yes, or maybe you can visit my homepage, tradingandpersonality.com. Maybe we can have a talk, Thomas. Maybe we can have a talk, and then maybe we can figure out, maybe I can help you. But just it's your decision. You have to feel comfortable with your mentor. This is really important, really, really important. Maybe in other words, by owning a large number of investments in different industries and companies, industry and strategies, risk is minimized. And here's the special word again, strategies between different companies and industries, strategies. That's the secret point in trading. And this decreases the volatility of a portfolio because different assets should be rising and falling at different times, smoothing out the returns of the portfolio as a whole, of course. I guess this is really logically, I think it is. Because if the one market goes up, the other one goes down. Or maybe this one strategy is working well, the other one strategy is working bad. But now you have a balance in your account. And this is one of the big secrets why experienced traders are really successful on a long run. And I know it's really interesting if you have a look on the internet, and if you see some account sizes or some accounts from so-called teachers or coaches, then you can see. Last week I saw one, and one of a special coach in the internet. He published a 1 month record of 18 or 70%, and I thought by myself, great, I love it, wonderful. But what the heck is 1 month? What the heck is 1 month? Nothing. You see, we have to publish about the ESMA restrictions in Europe. We have to publish 3 months, and then 80% of all traders fail. So if you want to have a look for someone who is really good in trading, ask for a track record for at least 1 year. At the best, better than 2 years, or maybe more, but at least 1 year. And I got so many offers on Facebook and something else that people want to sell me their strategies and so on. And always my first question is, because I'm a really friendly guy, I always get back with some answers. And always my first question is, please send me a real track record, not a back test. Stupid back test. I always ask, send me a track record from a real account, at least 1 year. What do you think? How many track records I got in the last years? Should I tell you the truth? 0. Nada. Nothing. No one is able to send me a track record more than 1 year in real trading, not a back test. So this is one, I would say this is one specification how you can choose your teacher. Let you show you a real track record. It's one thing to sell you a strategy. It's one thing, that's easy. That's not really the big challenge. But the big challenge is to trade your own rules. That's the point. Just a friendly advice. Okay, now different asset classes, of course. To diversify well, you need to invest across different asset classes and within different options in an asset class. For example, if most of your money is in 1 or 2 asset classes, it may be prudent to consider other asset classes. So 3 simple ways to diversify your portfolio broadly are by investing across asset classes within an asset class and internationally. So I want to show you, for example, my account here of Admiral Markets. I trade in Forex, for example, majors, minors, and exotics, but different strategies, for example. So you see, this is Euro Canadian. Oh my God, I'm in profit. That's nice. I've forgotten this trade. So, oh, you see, that's the loss. Example, what you see, that's, for example, that's a minor pair. USD, Swiss franc is a major pair. Then Swiss franc, Japanese yen, it's a minor pair. The British pound, Swiss franc, it's a major pair, minor, sorry. But of course, you see Euro Swiss krone, for example. Oh my God, 6,000 pips in profit. Oh, Jesus. That's nice. This is an exotic pair, different strategy. And you see in my list, I have also Brent, I also have DAX and Dow, and I also have gold, for example, NASDAQ, silver, S&P 500, WTI. And of course, on another account of my private accounts, on the private account, I trade with coffee, natural gas, cocoa, orange juice. And unfortunately, I cannot trade cheesecake because I love cheesecake with blueberries, but I cannot trade it. I can eat it. As you can see, I love cheesecake, but I cannot trade it. But I love to trade commodities and something else. This is a big basket, for example. So just a little bit fun, by the way. Okay, so you see, it's absolutely possible to make money in trading if you understand the real meaning of kind of diversification. So setting the right asset, the allocation for your financial goals or personal specification depends on the specific number of factors. These include your investment time horizon and what you're going to use the money for. Long run specification. You see, you should think about maybe a business plan. And when I started to teach someone, so maybe you can ask Sandra today, I always required a business plan. I never started teaching someone without having a business plan. Why? If you don't know where you want to go, you're just wondering where you come out. So if you don't have a goal in your life is over faster risk, you can have a look. So if you're looking to preserve it, you will need to limit risk. And this is the point. You have to calculate your risk. And now, at least, we talk about horizon, the last one for today. Diversification is also important, but regardless of your time horizon goals. And as your goals, a time frame change sometimes because your life, you get married, you get kids, or maybe you lose your job or something else like this. The levers to shift should be determined by how aggressively the diversified portfolio is built. And investments allocated to a long-term goal can lean more heavily on stocks, for instance, than those geared towards near-term goals. Life is really changing. So that's the key of success. Investment or trading objectives can really be met by investing in a single asset class. A portfolio that actively invests across multiple asset classes has more sources of potential return and can better adapt to changing market conditions. And this is one of the keys to successful investing, is learning how to balance your comfort level with risk against your time horizon. This was an obvious view at the topic of diversification. So just give me 2 minutes, please. This is the conclusion. You see, not keeping all your eggs in one basket. I hope you got the message. The ultimate aim of portfolio diversification is to lower the volatility of a portfolio, because not all asset categories and moves together in the same time. So it's kind of lifesaver, this diversification, and then you should. Sometimes you have to switch diversifications depending of your time horizon and goals. And by the way, if you have any questions I couldn't answer right now in this, you have my email or write to. How should I say, to Atman Markets, of course. And then you have our trading spotlight community. You see, we can share our ideas here from Jens, Paul, and myself. And this is our lovely, look, participants, 194. Jesus, so huge family right now. Let me invite you to this wonderful family. You get all your answers there in this lovely family and community. So Friday, my continuous partner Jens is talking to me how to trade with ATR indicator with this question topics. You can see on Friday, the October the 16th, and my lovely host send you this group in the chat. Please click on it. Just only one requirement: open a real account at Edmund Markets, put some deposit on it, and then you are part of this lovely and wonderful family here on Traders Yard. Okay, thanks. If you want to have more information, you see mail, YouTube, Facebook. This video you can just have a look. Katie Club, I think on Friday, right? Friday you can see this video again. And yes, I want to close this webinar with my gratitude and really appreciate that you spent your lifetime with me. I hope you learned a little bit stuff, Chinese stuff for your own trading. And I only have this one wish. Please don't waste your lifetime. We only have this one life. Be friendly to each other. You know, if you are friendly to each other, it will come back to you. And this is why I want to share my experience with you. And I hope you can enjoy the rest of the day, the rest of the week. And I hope we will see each other next Wednesday with special topic about pivot points. And now I wish you a wonderful, lovely day. I hope we'll see each other next week or somewhere else. Be careful about your thoughts. You know, they're the beginning of your actions. See you. Bye-bye.